The markets, well, a semblance of sanity. We were almost looking down about 1%. Now we are down about 0.5%. So a bit of a pullback from the lower levels, in and around the 7,800 mark. So good going there for the markets. But let's take it to IIFL now. When Prabodh Agrawal, Group CFO of IIFL, joins us right now on the show. Prabodh, give us the key result highlights. What's led to this flattish profit growth this quarter?
Okay, actually, if you look at our full year profits are up 14%, and this is driven primarily by the NBFC and the wealth business. Our NBFC profits are up 12% YOY. Our wealth profits are up 52% YOY. The capital market profits are actually down, and they are also down Q on Q. In fact, Q on Q also, our NBFC and wealth profits have grown, although at a slower pace, and the capital market profits have declined. So that has pulled down the overall growth rate. But there are several factors. We are changing the asset mix. There has been degrowth in some of the high yielding loan segments for us in the NBFC. We have degrown our large mortgage product. We have also degrown our gold loan product. That has impacted our interest yield and also our NIMs. So therefore, there is some Q on Q sort of slow that growth that you are seeing. But as we see, this is a conscious strategy on our part to de-risk our book, to rebalance our book. And we think now, we have a pretty balanced loan book, and we should have a steady growth going forward.
So just continuing with the NBFC, while you did mention degrowth in certain segments, how have margins and asset quality been for you this quarter?
Yeah, okay. So the margins have declined marginally. Currently, they are at about 6.1%. And the margins have declined because of the change in asset mix that I mentioned. I would think that, the margins should stabilize at these levels. In terms of asset quality, our gross NPA and net NPA ratios have fallen Q on Q. Our gross NPA ratio is currently at 1.4%, and our net NPA is at 0.5%. So our overall NPA levels are pretty comfortable, low. And moreover, our NPAs are well provided for. So our total NPL coverage is currently at 89%, including standard asset provisioning. And this is well above the RBI norms.
What is your outlook, Prabodh, on loan growth, margins or asset quality?
Yeah, so actually we don't give a sort of forward guidance, but what I can say is that we have all the building blocks in place in terms of distribution reach, in terms of people, systems, and diversity of products, presence in some of the fastest growing segments. And therefore, one would expect that, we should have a good growth, a decent, good enough growth going forward. We are also very mindful of the asset quality. We are preparing to move to 120-day NPA recognition norms in the current quarter. So I would think that, right now we are very, very well positioned to, grow. Our margins, as I mentioned, would remain steady. I think the margins have fallen, but given that the asset mix change has broadly played out, I would think that going forward, the margins should be stable at these levels.
Speaking about capital market business, what's been the key highlights, Prabodh?
So the capital market business, the turnover was overall, the turnover was down about 10% YOY, which is broadly in line with the fall in the market turnover. And of course, the commission rates are slightly under pressure. So the profits have declined YOY. So the capital market outlook is pretty much tied to the outlook for the overall equity market. Very difficult to sort of forecast that. But we think it's a profitable business for us, and it's a good business. It could provide an upside whenever the market turns up. But in the meanwhile, of course, the share of capital market has declined significantly in the overall scheme of things. So if you look at FY16, then almost 65% of our profits came from the NBFC business, 25% came from wealth, and only about 10% came from the agency business.
Right. Prabodh, so how has the financial product distribution shaped this quarter, and what would you say is the outlook going forward for the fiscal?
Yeah, so the insurance is also part of the agency business, which I mentioned. And there again, the growth has been not that strong. And of course, there are regulations by the regulators, which caps the, distribution fee payable to, agents like us. So there again, we see sort of limited contribution.
Right. And overall growth strategy, what to your mind would it be for IIFL Holdings, and what would be the key focus area, and also how sufficient are you on the capital front?
So the thing is that if you look at, the two capital intensive business, one is the NBFC, the main NBFC, and now we have a second NBFC in the wealth business. For the main NBFC, our Tier 1 CAR is currently at 11.7%. Our total CAR is at 17.7%. So we are well above the minimum requirement. So there is no need for immediate capital raising, but probably towards sometime in FY17 we may look to raise capital. The other NBFC has just been formed. That is a subsidiary of IIFL Wealth. And there General Atlantic took a stake and they infused about 900 crores, which has been put in as equity in the NBFC. That NBFC, of course, is now under leveraged. It has got a loan book of only 100 crores. So it has got plenty of scope to leverage going forward.
Right. And any plans, Prabodh, for inorganic growth and any such developments possible on the likes of General?
So of course, we are always evaluating opportunities, and we are looking if we can add more business lines, of course, within the financial sector, financial services space. But of course, these are matters which would be announced as and when, there is a development. So nothing to share at this moment.
Prabodh, since you are with us, I can't help but ask you, the Reserve Bank has released draft norms on universal banks. While you were one of the applicants last time, as per the current draft norms, will you be eligible, A, as an NBFC to apply, and B, how does the overall on-tap universal bank license fit into IIFL's overall growth strategy?
So on the first part of your question, now, as you mentioned, of course, we did apply for the universal bank license the first time around, and I haven't seen the latest guidelines. But assuming the guidelines are similar to what was issued earlier, we think we should be eligible. Of course, NBFCs are allowed, and we are neither an industrial house or a business house, and we are a growing NBFC, so I think we should be eligible. On the second part, whether we intend to do that, of course, our intent is to become a bank at some point of time. Not that, at the moment there is plenty of growth opportunity within the NBFC space. Of course, we can grow as a NBFC as well. So we'll evaluate, and our board has to evaluate whether, we need to apply now. Given that, as you mentioned, the banking license is on tap, whether we need to apply now or after some time. That is something our company and the board has to decide.
Prabodh, good chatting with you. Thanks really for giving us an in-depth insight into what the strategy for IIFL is going to be going forward, and of course the earnings gone by as well. That's the clutch of NBFCs and brokerages which are currently trading right now. Edelweiss, IIFL Holdings, they're all looking up. You've got a DHFL, which is taking a bit of a breather. Capital First as well should be the other one, which should come off on your screens.